Good afternoon, everyone, and welcome to Nelson Mandela University Business School's Business Rebound Webinar Series 2020. We are very, very pleased to welcome you to this, the first episode in a series of webinars that we will be hosting this year and in the future to talk about issues that touches the lives of people economically, business-wise, as well as in society. Today, we are going to talk about a business as it is affected by the COVID-19 pandemic and the hard lockdown and the impact it had on people's lives as well as people's livelihoods. With me today is our guest speaker, Mr. Johan Jooste, who hails from Port Elizabeth in South Africa, but is actually finding himself at the moment in Singapore. Johan is an alumnus of Nelson Mandela University, as well as a member of the advisory board of the business school. Johan is currently the co-founder of the Global CIO, as well as the former Chief Executive Officer of the Bank of Singapore. Johan is also an alumni top achiever, and he has been very, very supportive of the work of our university, as well as the business school in general. We want to wish Johan to our fold here this afternoon. And before we start, ladies and gentlemen, I'm going to ask that we just for a minute or so, just observe or have a solemn moment of observation for the deaths that we have seen throughout the world from the COVID-19 pandemic, as well as the other tensions that we are seeing in the world, particularly poverty, unemployment, inequality, but also of late the racial tensions, as well as the global movement for Black Lives Matter. And just for a moment, just observe that as well. Thank you. I hope that you can hear me clearly. Thank you very much, Pedro, for that message. I believe my connection is not so good. So Johan, if you can hear me clearly, I'm going to put you on the stage as soon as I am ready. Thank you. So ladies and gentlemen, as we said, the global pandemic has actually affected the way we live, the way we work, and the way we do business. And it has also brought us many uncertainties. So companies are facing many, many challenges with the drubbing of employment being seen in the world. And of course, the big question is, how do we deal with this impact, this negative impact on our economy and business and society? So we've asked people who have the expertise and the knowledge to actually share with our audiences what they think could be the kind of solutions we should be looking, and also to theorize what we call business rebound and business recovery. Our impressive panel of experts will be sharing information on financial or business recovery, what leaders can do to weather the downturn, what do they do in a recession, and of course the competitive behavior of businesses in the pandemic. There are many other topics that we will cover, but for now I want to welcome our speaker, Mr. Johan Jooste, all the way from Singapore. Johan, the stage is yours. Thank you very much for your time once again.
Thank you for the kind words and the introduction. I always caveat these kind of talks with the warning that I get quite uncomfortable being labeled an expert, not because Donald Trump hates experts, but because I don't want to create the impression that I know about the future. I can tell you what I think, and I'm very keen to make a contribution to, however modest, to your understanding of COVID, your understanding of how it's affecting the globe, the areas that I am involved in professionally. But I guess the most important piece is how that works and how that's going to feed all the way down to people that are listening to this call. I've learned through bitter experience that if you theorize about things too much and you don't end up with something concrete to take away, that doesn't count for a whole lot. So my invitation to everybody that's listening is to try their best to interrupt with questions. Dr. Jonas will see them. We'll try to address them as we go along or at the back end. So I'm going to keep my comments as terse and to the point as possible. And specifically, try and sort of tease out whatever there is to be teased out in the context of something that you might find useful, or at the very least something interesting. So the first thing to note about the pandemic, which is probably something of a trite and obvious statement, is that the policy responses across countries has been extremely varied. I find that slightly surprising, because the world has seen pandemics. Even in this or the last few centuries, we've had the 1918 Spanish. Not many people know this, but in 1957, there was an Asian flu outbreak in the US, which had the opposite characteristics of COVID, which was young people died. So everybody was kept out of schools, the pupils were kept away, university students were kept away, and the death rate out of that one, the fatality rate, was nowhere less severe than COVID. And then we had SARS, and we've had Ebola, and a variety of things. So in no particular way can you really call or claim that this was such a big surprise. Or certainly from a policy point of view, if a government claims to have been unprepared, they would just like that was negligent. And you can see this across countries. Some were very quick to respond, and for their efforts that are clean. New Zealand is an example. South Africa responded fairly quickly, relatively speaking, but it has the same problems as quite a few other countries, especially in Asia, which is it's extraordinarily difficult to keep it going because everybody is so totally tightly compacted. That's a very difficult scenario to deal with. So my message there is you're not the only ones that have that kind of problem to deal with. I'll deal with some of the other issues sort of from a policy point of view later. One other point about the pandemic right now is there's a lot of talk about the so-called second wave, and I would suggest that's misplaced because the first wave is still with us. In China, there's a minor second wave. In Korea, there's a minor second wave. Singapore thought it had the first wave under control, and then they didn't. It's now probably well under control, but as I sit here, I haven't been in my own office since the 2nd of April. And I've turned my study into a control center with quite a few computers and machines and lots of internet connections to be able to operate the way that I want to. And the same applies across the most of Asia. People we talk to in our business and socially predominantly aren't going back to the office for the foreseeable future, and even then in a fairly limited fashion. So that's sort of top level comments. I think I wanted to speak just briefly globally about sort of the depth of this recession. I call it a pan session because it's a recession caused by a pandemic. Not very creative, but I think that's a nice way of framing it. And then also the big question is, what happens after this? So what do we know, or what do we suspect we can predict with a certain level of confidence about the recovery that's already underway? So the first point is, I don't think we know enough just about the nature of the virus and the outcomes to be very confident. And it's also going to be very different across countries because countries are active in different ways. Some countries are very tourist dependent, some countries are very energy dependent, some others are very well diversified, or there's just different ways. What I can say, though, is just actually before this call, I was looking at some of the things economists are putting out in terms of forecasts. Take this with a pinch of salt. And I know there are economists on the call. I don't mean to insult you. I trained with you. I was actually in your class a couple of decades ago. And you will concur with me, economic forecasting is not an exact science. However, it does look as if, roughly speaking, it'll be somewhere the Q2 of next year before growth rates globally on average are about where they were in January this year. So that leaves it a fairly long sort of peak to peak type of movement, if you like. But that doesn't mean we're back to where we were. All we mean is the growth rate is back to where it was. The actual dent, the hole in the economy, is everything that happens in the middle. And for that to recover, incomes to go back to where they were, wealth levels to go back to where they were, your savings account to get to the same balance as it was before, it'll take a lot longer than that. And if you're a business owner, the same applies. You've probably gone into your reserves, and you're wondering where will you get them back again. Maybe you've had some difficult conversations with your bank manager, and these things. So it'll take a while. Usually, though, recessions are not infinite. They never are. This one will be somewhere a little bit worse than post-Lehman, it looks like, but not catastrophically sort of destructive like we had in sort of 1929 onwards, where we had, let's say a simple number, unemployment in the US. It did touch like 30% quite recently, but it's already coming back. In the recession, it stayed there for a lot longer. That's tough. I'm talking to South Africans who know what it's like living in an environment with high unemployment. If you have that globally, it gets to be a really catastrophic outcome. It does look as if we're going to avoid that at the moment anyway. Human beings are particularly bad at visualizing things outside of their experience set. So I know this from my own experience also, is we're always trying to guess where the market is going to go. You're always trying to look at a particular strategy or strategies from the point of view of what can possibly go wrong. And invariably, stuff goes wrong that you couldn't see coming. And the reason you couldn't see it coming is you've never seen it before. And we're very bad at imagining things we don't know about. And frankly, we don't know enough about this virus to know exactly how the outcomes are going to pan out. So I'll touch on some of those implications just in a minute or two. What it means, though, is your best bet, your best defense against any of this, the outcomes and future things that might be occurring, is really to build a level of resilience as opposed to trying to guess what happens next. There's a thing called the Maginot Problem. After World War I, or the Maginot Effect, after World War I, the French thought that the best way to keep the Germans from invading France, like they did in 1914, was to build an enormous big wall and fortifications and all sorts of things, machine gun nests and whatnot, so that no army that marches from Germany to France can ever get into France again. This was called the Maginot Line. You know the history. There was a thing called the aeroplane, and that was the end of the French defense. So we forever fighting last year's battle. So it's pointless for me to give you advice on what would have worked had you known about COVID, because there won't be another COVID. The next thing will be different. So the best solution is to have that flexibility and the ability to adapt really quickly, as opposed to having a hardcore strategy in place that saves you from COVID, because it's unlikely to be the next thing again. Then quickly on the debt burdens, South Africa is, again, it's one of the countries that's had to really print a lot of money to try and sort of help out. So I've asked my own question, and I'll try and answer it, is, has the West just lurched into socialism as an emergency measure? I was on a call just 2 days ago with a very famous author called Nassim Taleb. He was the writer, the author of the book, The Black Swan. So I was fortunate enough to be able to listen to him on his thoughts on this. And he thought that the most surprising thing about this crisis has in fact been a very sort of a near miss, and in fact the possible sort of adoption of socialism in the US. It's either a full-scale socialism or it's some hybrid form of what economists might call modern monetary theory. So I know for those non-economists on the call, what that means is just printing money. So you see a problem, needs a bit of solutioning, and hey, what do? You just print some money and you hand it out. This was done in 2008 and 9 in small scale when governments bailed out banks. Now they're bailing out everybody, as in basically everybody. The bad news for socialists is, unfortunately, the government is not planning, it doesn't look like they're planning on handing over these assets to the proletariat. They're going to keep it for themselves, right? So that's not socialism, that's something different. It might be command economy, but I can tell you the workers ain't getting the companies, somebody else is. So there is actually then no precedent for where we are. I don't know precisely what the South African government is planning, but in Europe and the US, there isn't, again, there's no playbook for this. In 2008 and 9, they basically bought bank shares, and the way they got out of the problem was wait for the market to recover, and they sold them back. Having said that, it might not be well known that there are still banks in the UK that are majority government owned that have still not gotten enough money back to buy the shares from the government that the government bought in 2009 to bail them out. I won't mention names. In the US, it's been sorted out. So then the question then becomes is who's going to pay for this, right? Lots of money has been pumped into the system. And some point in the future, you have to pay your bills. And basically the government is now taken from the future and brought it into today. That's what the loan is. They've gone and borrowed. And the simple answer is it's the millennials. Bad news, if you're young, you're going to be paying the government debt for the problems that we basically faced from January to now and maybe up to August, September this year. Why do I say so? I've just looked at the numbers. Is in 2008 and 9, look at how much money was pumped in globally by governments. The magnitude today, as we speak, and this is excluding whatever happens from today onwards, it's 3 times. That is 3 times more globally has been borrowed from the future into today to sort out today's problem. So someone has to pay that back. That's the taxpayer. And guess what? 11 years on, we still haven't paid back all of the debt that was taken on in 2009. So if it's taken us 11 years and we haven't paid that back, multiply that by 3. So our best case is 30 years. And I'm 50. So by the time I'm 80, maybe the job's done. The burden is going to be on whoever comes after me. So that's like the next gen. That means the economies have to reshape. And this is the kind of, I'm not trying to be doomsayer. Economists are known to be the dismal scientists. The point I'm making is to avoid this scenario is economies have to reshape themselves in a material way. So I don't think the changes that are coming from COVID are going to be the things that we see coming. It's going to be something different. And it has to be around a landslide shift in productivity in economies to be able to grow fast enough to pay off this debt. The current speed is simply not going to do the trick, and it's going to cause social disruption in a way that is going to be difficult for us to comprehend. But it'll take a while until the penny really drops. In the same way that we saw with climate change, it takes a long time for the evidence to actually start convincing people. And this is to do with my previous point. We're just very bad at understanding things that are outside of our experience set. So we've never been in a position where governments owe this kind of money and own these type of assets that they have before. So what that means is technology has to move forward very quickly, and governments have to think in a very, very different way about how to interact with with the electorate. And I think that if you are a wealthy individual, you have to expect higher tax burden. If you're an asset owner, like property or land or something of sort of a very easy to spot. In other words, the government tax collector it's very easy for him to know you have a house because that's where you live. So it's a very easy thing to tax. And likewise, you're an easy target to tax as soon as you pass away because there's no one to defend. That's called inheritance tax. So these things in most of developed markets are really going to become a tool to claw back some of the debts. So that is an important piece. In the developing space, Africa, Asia, it'll have to be that plus others. There's simply not enough rich people in most of the non-Anglo-Saxon first world economies to foot the bill. So the only other way out is to pay it back quickly. And that means governments have to think in an entirely different way about how they structure public policy in the context of fostering growth. They're going to have to spend a lot more money on education. They're going to have to spend a lot more money facilitating technology and a variety of other things that are proven to be growth drivers. So that's sort of very a kind of a global sort of a, let's say, perspective. Now I want to sort of move on to sort of going into something a little bit more Africa and what these implications might mean, right down to sort of the very basic level. Is I want to go into sort of, I've asked myself the question again, my own Q&A basically, where are the winners? Are there sectors? Are there countries? Are there companies? Are there types of strategies that win? And I've just got them in three categories. I call them thrivers, survivors, and sinkers. So I don't even want to go to the sinkers. That's easy. That's straightforward. These are things that, or sectors or countries that are just so exposed to stress that they face a survival problem. It's not predictable. So this is not a value judgment. Let me make that clear. These are things to think or to categorize on the basis of how they react to stress. So how do you react when you suddenly face uncertainty and a very, very sudden change in the environment that you used to operate in? So this is not to say you're doing things badly. It means you're exposed to the volatility. I'll give you an example. A survivor and a type of industry or a career that's a survivor would be something that's very, very, what we call in the markets, it's a defensive sector. It's counter-cyclical or it's anti-depression. What do I mean? Doctors always have jobs because people are always getting ill. Dentists, nurses, for that matter, for a long time. It might change now. And certainly in South Africa, they tried it. I think it failed. Other jurisdictions, same. There's like no tobacco, no alcohol. But there's very stable demand for those. Whatever you think of it morally, those tend to be comparatively survivable. Some countries are the same, very diversified, bit of exports, bit of imports, bit of mining, and so forth. That they tend to be, the bigger ones, and they tend to be okay. Some other ones are very, very unlucky. They're either exposed to oil price. If you're in the Middle East, you've got a problem because the oil price is just halved, and the Russians and the Chinese are trying to get it as low as they can, and they're going to keep doing that. Equally, if your economy is based on tourism, you've just faced a shock, and you're not coming out of it anytime soon. So that means Thailand has got a problem. That means the whole of the Caribbean has an issue. Is it their fault? No. So you can't make that value judgment, but you have that as an example of something that's going to struggle. As an investor, someone trying to allocate capital, the holy grail is the thriver. This is the ability to do comparatively better when things get worse. I like to use a philosopher, Nietzsche. What doesn't kill me makes me stronger. As you take, it's a very stupid example. If you go to the gym and you pick up light weights and you pick up a 10 or a 20K weight for a fair period of time, that's not going to kill you, but it will make you stronger. But if I drop 200 or 300 kilos on your head, that'll kill you instantly, even though it's a much lower weight in aggregate than what you've been able to pick up consecutively over a period of a month or a year. So that's the sort of thing we mean. You build and you develop that resilience and the ability to actually thrive. Now, those industries are exceptionally rare, and those sectors are rare. And as individuals, very few of us actually have that capability. We're good at surviving, but not many of us do better when things get worse. So that's almost the holy grail. But to build a survivorship bias into your own business, there's a few things I think that one could mention. The obvious one is leverage. As a financial practitioner, I can tell you this from experience of observation, is the more leverage you have, either borrowing from a bank, or if you're a country and you take on board debt, you sell bonds, whatever it is you do, leverage reduces resilience. I mean, that just because you have to pay it back at some point. The more of it you have to pay, the more of whatever you're earning today, you're going to give to whoever your creditor is. And that leaves your room for maneuver extremely limited. So that's one of the first things, and that's the way I've set my business up as well. Currently, total debt outstanding for the Global CIO office is $0. And the idea is to keep it like so. At the same time, we're trying to build, this is just my own example, we're trying to build a revenue stream that's dependent not on the level of markets, but on the level of service we provide clients. And that becomes, it's much more stable, it's much more slow moving than banks. But through this, the whole crisis, we didn't lose a cent, because when things go well, we earn the same as when things go badly. That's just the way we've set ourselves up, deliberately trying to be a survivor. Time will tell if we actually can be a thriver, but that's maybe asking too much. At the country level, obviously debt is an issue, but also how do you build as a nation, how do you build that survivorship bias into it? You have to have more fires, more irons in the fire than just one or two. And for any emerging market, the best way to do that is an extremely well-educated workforce. So you're in the right industry, Dr. Jonas. You're teaching, you're teaching the leaders of the future, and you're building the educational background and base of people that are going to enter the economy. That is almost your best bet. Your second best bet is to make sure that you have many things going on. So you have to invest broadly. Some will fail, but some will succeed. So you want to be, at the moment, very much involved in technology because it's such a growing thing. And let me move to a few other ones that are particularly relevant for Africa. And I say this because I know so. I'm in a very privileged position from the angle of seeing not just the investment opportunities that are available globally, but also speaking to people who have the will and the ability to invest. So I see both sides of the equation. And COVID specifically, in the first instance, has moved and shaken up supply chains. So if you think what globalization was maybe 5 or 6 years ago, long supply chains, you start in China, it goes all the way down to wherever in the US and back again. And it's airplanes and it's planes and it's boats and ships and things. Now it's become much more localized in the sense that the length of the supply chain has added a degree of vulnerability that people didn't previously appreciate existed. Because the further away you are, the more difficult it is to get on a plane because somebody has put you in quarantine. There's extra testing and so forth. So by the time your avocado from Tanzania gets to Singapore, that's black because it's taken so long to get here. It's like it's gone off completely. So now you have to suddenly find who else close by is making or produces avocados. And the answer is Malaysia. It gets difficult because Malaysia doesn't have the COVID thing under control. So the border crossing is actually closed. So what do you have to do? Number one, you have to speak to the farmer. Number two, you have to make some arrangement to get them tested, whoever drives the truck across the border. And this multiplies across all over the place. So for the first few weeks, this is why panic buying set in, because supermarket shelves started getting empty anywhere in the world, UK, Australia, South Africa, everywhere. So supply chains are going to shorten. So that means you have to start investing in things that are much closer to you than before, even though that causes something of an expense, but it does make your fragility, you're likely to be a sinker. You reduce that by shortening your supply chains. You make them much more robust. That goes for agriculture as well, although it's harder also for agriculture, but also for mining. But mining is more difficult because you dig the copper out where the copper is. You can't move the copper mine to next door because next door guy doesn't have any copper. So there's more of a challenge in that space. But already, you can see some of the supply chains in that area also starting to be reimagined. In the case of Africa, one area that we see that it's already something there where people are involved, and it's a massive game changer. It is a potential leveler, and it's a thing called blockchain. You all would have heard of blockchain. We already have, in my practice, live examples of where the use of blockchain has freed up producers in Africa to be able to access markets they would not have been able to access otherwise. I would describe that as very much tip of the iceberg at the moment, but the technology is becoming much more accepted, certainly in Asia. In Singapore alone, I believe there are 6 companies that are already licensed by the monetary authority to be able to sell tokens, to do token exchanges. You can put anything on a token if you can put it on the blockchain, including a shipload of avocados, or half a ton of coffee from Kenya, or for that matter, and this is my favorite, half a container full of biltong from Pretoria. And I tell you what, if I can get that business going, I'll crack it in Singapore much quicker than I will in financial services. So working on that one as hard as I can as a side project. So that is something that not just Africa is looking at, but I can tell you also from experience in the rest of Southeast Asia, the Vietnamese, the Cambodians, Laotians. And the reason is you disintermediate a lot of the problems that you would have had in a normal supply chain and in the normal course of trying to do banking business. So if you're a student and you're listening to this, if you are a lecturer, whoever you are, if you're thinking of preparing yourself for the future, that is one area that could be really, really interesting, and it's also extremely useful to be able to get your message across. Because the people involved in blockchain and the way that technology is being built, these are innovators. They are natural risk takers. So the notion for them to invest in Africa is not as exotic as it is, for example, and I don't want to be too discriminatory in this, but let's say an older, much more Anglo-Saxon thinking family office or rich, let's say, sort of investor based in Europe or the US, for whom the jump to Africa is something much more difficult to get across from a risk-taking point of view. If your base market is Malaysia or Indonesia or possibly Vietnam, that's not particularly less risky than anywhere in Africa. I can tell you also that is a growing trend in markets is a notion called frontier markets. So you would know in the recent past, everything was all about emerging markets. A lot of the emerging markets today are very mature. So a country, for example, like South Korea, until very recently would have been classified as an emerging market, and that was just wrong. I mean, it's very industrialized, it's very, very first world in most aspects. Even Singapore, until fairly recently, would have been falling under the emerging market back category. So it's no longer the interesting sort of almost frontier type of approach. So therefore, the new term frontier. And South Africa doesn't count as frontier because the infrastructure and the backbone of industry is quite advanced. But the rest of Africa probably does. Large parts of Middle East and sort of Near East places like Sri Lanka, Bangladesh, and these parts are opening up to global investment. And if you're South African or if you're Kenyan, you need to compete in that space now. And you need to be able to show the investor base that that's where you're a reasonable destination for their capital. Now, what does that do, or what do you need to be able to show? And I think my first one, I've already answered the question. The first point clearly is technological ability to be able to link to the blockchain or to some other way to digitally connect with your market if your market is overseas. Give you a very stupid example, very simple one, is large organizations and small ones like myself. We put out a lot of marketing material, banks do it, insurance companies. And in very few places do you still get away with not doing it in English. But in many of those countries, the English might not be great and your internal staff is not necessarily the best ones to do your editing. So what we do, and I know that quite a lot of Singaporean firms do this and Hong Kong firms, you just outsource. So you find someone that's good at English, can write your stuff and turn it around and send it back to you by email. And you can be anywhere in the world. So we use someone based in Bangkok. I have a good friend that does it out of Cape Town and doesn't have a single South African client based in London, based in New York. Where do you want to be? This makes no difference. All you need is an internet connection and the ability to connect to possible clients wherever they are. And COVID is going to absolutely reinforce that, and it already has. The big problem for me is I work very stupid hours now because everything has just bled into one long day. And I've had this conversation with lots of other people. But the upside is, we're now in connection with people from San Francisco to Oslo and Auckland and everywhere in between, because everybody else has the same problem. And that's an opportunity that I would describe as once in a lifetime. That's a crisis that South Africa and the rest of Africa must not let pass, because it is so easy to connect now. If you have the connectivity, just do it. Because if you have, you have a virtual background. I've chosen to use my own one because my virtual backgrounds look blurry. But if you have a virtual background, it makes no difference if you're in Nairobi, Johannesburg, or for that matter, San Francisco or New York City. It makes absolutely no difference. If you can deliver to your client whatever it is that he wants in whatever format that he's requiring, you will get paid. And it no longer makes a difference if you can get a plane or get on a plane and be there face to face and you have to spend on marketing budget. That is an opportunity that will only come by once or twice in your lifetime. Grab it now while you can. At the same time, so we've said that about technology, and then I guess the other most important piece, do what you can to reduce your debt burden. I think that is from a macro point of view or from a micro point of view, I think that's sort of like a pretty key view. I think I'm going to stop there, Dr. Jonas. I think that that is a bit of a mouthful. I'm trying to be as balanced as possible. I sort of leave with one, or just like finish my sort of prepared remarks with just like the final point, which is to echo Winston Churchill, is don't let a good crisis go to waste. Try to be as absolutely upbeat as you can and look for all of the possible opportunities that this gives you from the context of how it has changed things. Be alert to those changes and try to be as flexible as possible, but view it always with the angle from sort of how do I access markets, how do I change my behavior to be as much of a survivor as possible, given that I cannot predict the future. What have I done up to now that has left me potentially vulnerable, if that's how you feel, and where can I make those changes going forward? And I think with that, let's leave it alone and see if there's like specific questions about any of the things, or maybe Dr. Jonas, you might have questions if you want to ask them. So let's go for that.
No, thank you very, very much, Johan, for that wonderful, wonderful presentation and talk on some of the key points and issues, the pain points, if you like, but also the positive side of how we can get out of this crisis. And I like particularly your focus on Africa and what should be done there. I know for a fact that the African economy is obviously mired in crisis upon crisis. And to make it worse now with the pandemic, as it were, and the national and global lockdown, we found that the export economy was not thriving at all because of their dependence on the European markets and others. So it is really rather difficult, and that, as you've said, can lead to an increase in social unrest and a lot of what we would call more poverty, inequality, and other problems that society will have to face. I was also very interested to look at what you would call your three, your thriver, your survivor, and your what do you call the sinkers. You said earlier on that you had a chat with Nassim Taleb. I remember that he also wrote the book on anti-fragility. And it actually is really about not just being resilient, but being better at what you are. So a crisis is actually, as you said now at the end, is actually a good opportunity to actually reshape our economic order in the world so that everybody can actually participate and in prosperity and welfare of all people and all nations. I think that is what we are about. So I've got two questions thus far, and both come from one of our participants, Dr. Ruby Ann Devendal. And she's got a very interesting question, and she asked about the post-COVID period, particularly the geopolitical dynamics, in the global, given the global recession. What is your view? Perhaps looking at Brexit, but must still be completed, and also the Trump carnage, as you know, in the United States of America. What is your view on that kind of geopolitical dynamics as well?
I think in terms of the geopolitics, again, prediction is a fool's game there. But I can tell you what I think the trends are that you need to be, let's say, sort of on top of. That's a trite thing to say because what does it help you if you know what's going or who's doing what? But the things to observe, I think, is the power dynamic around the ambitions of China. That's a key issue. They've played their hand now very, very clearly. In Southeast Asia, there's dismay about how they've dealt with things. First, they got it wrong in Taiwan. That probably wasn't covered that well globally, but it certainly was covered here. What did they get wrong in Taiwan? They had a massive propaganda program in China and on social media in favor of a pro-Beijing candidate in last year's presidential election. And everybody was like, okay, it's going to be a close call. It wasn't a close call. The pro-Beijing candidate absolutely bombed. So if that was a referendum in Taiwan about do we want to go the Hong Kong route, the answer was a very, very resounding no way. So that, I don't know how well that was covered, but that was certainly a very clear signal in Asia. The second one, of course, is what's going on in Hong Kong, which is a blatant power grab and a total disregard for international law. You can see also recently there was, for the first time, fatalities in the border region between China and India, when there was an incursion of Chinese troops into India. So China is becoming pretty blatant about what they want. And what they want is sort of a trade hegemony. They do not want military dominance. They do not have the military capability at this point to stand up to Russia, let alone to the US. And they will never go into an alliance with the Russians because that's not going to fly for them. They know for at least another few decades, the US will have the technological edge of them militarily. What they're building, and this is the Belt and Road, is a position where they can essentially sort of earn themselves the right to be the global leader. How they do that is going to be something that's going to drive relations globally for the next decade. They can do it in a collaborative way, or they can do it in a very aggressive nationalist sort of way, very sort of let's call it sort of like a non-cooperative, non-democratic method. I think the COVID crisis has highlighted to the world what they face in China. And if China was smart, they'll tone down the rhetoric. And if the world is smart, they will just be a little bit more reticent to engage until China changes the rules of the game. At the moment, the rules of the Chinese game is it's our way or the highway. And more people are going to start picking the highway than they thought. And I think as that becomes clear, they might be a little bit less inclined to be the bully in the playground. The second issue, which is sort of globally, I guess, critical, is just what happens in November in the US. Does Mr. Trump win or does he lose? I know that his poll numbers are shocking. They're worse than they've ever been, even before 2016 compared to now. They're in horrible shape. Despite the market being up because he thinks the stock market is a barometer of his popularity, which is not quite correct, but that's what he believes. The reason why China can do what it's been doing is because it views the US as basically ceding ground. So if they keep ceding ground, that'll be difficult to make it back. He's taking troops out of Germany. He's completely sort of reshaping NATO in a very negative way. So a democratic president would take 4 to 8 years to just mend the fences, but at least it'll stop the rot. So that's a key thing. So I'd become quite negative about sort of the ability to do business across sort of Anglo-Saxon world and China, which is what we're trying to achieve in Singapore, if Mr. Trump wins another election. And I guess from a geopolitical point of view, something that will affect Africa as much as sort of global China view is also the energy prices, oil, and then how that feeds into the whole sustainability argument. In other words, to what extent do we go much more sustainable, and what the costs of those things are in terms of technology rollout, in terms of sort of again changing production methods and so forth, which could be either a big opportunity or a big threat for Africa. As it looks at the moment, if anything, COVID is accelerating the adoption of cleaner tech. And again, that would strike me, if anything, as on the margin, probably more positive for Africa than negative, because again, that's a new technology that you can grab and run with. Certainly, solar power is something that I struggle to understand why Africa is not a leader in that, because man, that's a hard continent. And the technology is now starting to develop to the point where you can have that very localized, and it's becoming quite cheap. So that's something I think government should have a look at, learn the lesson that if you're going to spend, if you're going to borrow a lot of money like they have, spend it on things that make a big difference going forward. And in sustainability, because of the unit cost of production and the new technologies, the country spent a lot in subsidizing that to get the adoption rates higher, quicker, have done extremely well. And I'm talking specifically, say, for example, the Scandinavians. They spent a lot of money on wind power and all of these things because initially it's expensive and it's sub-economic. It costs you more to run than fossil. But once you get it below fossil, it goes very rapidly. I think in the UK, I read recently, they went something like almost 7 weeks, 8 weeks, purely on wind and solar and renewable, because the grid is now interchangeable. So if you can get to that kind of level, you build in not just sort of economic benefit and planetary benefit, but you also make yourself economically, that word you just used there, anti-fragile. because you're no longer subject to the vagaries of like some global political argument between Vladimir Putin and the Chinese president. You have the sunshine in your own backyard, right? That's way more dependable for an African economy or any other economy than sort of the global or sort of your geopolitical exposure. So those, I think, are like the really big things. And then little things to worry about or to be aware of is just be very cognizant of sort of technological moves. 5G is going to be very interesting. I think people overestimate the speed at which 5G can be implemented, but that could be a game changer again for Africa, because that's something you can leapfrog 3 and 4 and go straight to 5. You don't have to develop 3 to get to 4 to get to 5. You could just go and grab yourself some 5G. That could be useful. It has extraordinarily good applications in things like agriculture and fishing and so forth, just the applications there. And then who's the winners and losers when supply chains shorten? Right, as supply chains shorten, those economies that already have a degree of inbuilt resilience are going to turn from survivors possibly into thrivers, because they can tolerate the changes and they're ready to deal with those. So that means tourism is a good thing, mining is a good thing, agriculture is a good thing. Just get as much as possible different things, different industries up and going, as opposed to sort of a single-minded focus on a specific thing. Like South Africa in the old days, it was a gold mine until gold price started falling. And what do you do? And the same, Caribbean economy is very challenged. What do you do if the tourist ships can't come anymore? You have to make a new plan. So be ready to make a plan, and the best way to make a plan is to have smart people and educated people that are ready to take the opportunities. So the answer is not precisely what to do, is to train people up to be ready to do whatever they need to do. That means you've got to have a very solid education system behind you.
Thank you. Thank you very much, Johan, for that wonderful explanation and input on the question. There was a second question from Dr. Lewandal, and I just want to quickly just give it to you because there's 4 more questions from the group. And that is just about the global currency crisis at the moment in the post-COVID period. Just some of your comments. I know that you have spoken about the printing of money, but just maybe some of your thoughts on a possible currency crisis in the post-COVID period.
Well, a currency crisis suggests like something is very strong and something is very weak. So I'm guessing the question revolves around, can you see something like the dollar being very strong and emerging currencies like the rand or the Turkish lira or something like tank, or the other way around? These things kind of come and go. I'll never forget my first experience of a currency crisis. I'm giving my age away, was in 1994 when I just started working. And it was a thing called the peso crisis, the tequila crisis. Mexican peso collapsed.
Yes.
Currency crises come and go, and they tend to come quickly and go quickly, and they're frequent. And the market is a very, financial markets is a very, it's a ruthless calculation machine. So it takes no prisoners, and it doesn't brook dissent. So it'll price it where it thinks it needs to be priced, and that's the end of the story. So if you take it back to my previous discussion about fragility, is emerging countries relative to one another and relative to strong currencies like Swiss franc or dollar, the fragility comes from debt. Almost invariably, a country that has little debt can spend itself out of trouble. Because it can make new debt. If it doesn't owe a lot of money, it can borrow, or the reason it doesn't have a lot of debt is because, frankly, it's been managing itself well and it's probably a strong economy in the first place. So it's not quite prone to a speculative attack or some devaluation. You just look north to Zimbabwe, look at Latin America, look at what happened in Argentina frequently. The trouble with Argentina is its debt and it can't pay them. And then foreign capital leaves, and basically the way that you leave is you don't get on a plane and take your money in a bag. That was what the mafia did in the 40s. What happens today is you push a button and you convert your Argentine peso into US dollars. That's the same thing as taking it in a bag out with a plane. And the result is that you look at the chart on the screen and it just falls away, and you have to change the scale. Otherwise, it doesn't make sense anymore. And it all goes back to debt. And if so that's the bad news. The good news is everybody's in debt. So one currency always trades against another. So I'm always buying one versus another. So I'm saying I'm buying rands, but I'm selling dollars. I'm buying Sing dollars and I'm selling euros. You can't just buy Sing dollars. It has to be against another currency pair. So if everybody else is in debt, the only ones that lose are the ones that are the worst in debt. Right? So that you have that situation. Now, globally, there is one other way to think about it, is if all currencies are subjected to a debt wave, which it looks like they are, with a possible exception of like Mongolia, who haven't noticed there's a COVID or something. I'm maybe being rude to the Mongolians, but is currency, generally speaking, versus hard assets. And if you say, just as I look on my screen now, gold is up another $10. Yesterday it was up 20. So there's an argument to be made that precious metals and hard assets, maybe mining assets, maybe gold itself, but also maybe property, some of these, will appreciate because paper currency will be depreciating because people lose faith in it because governments are just printing it willy-nilly to fix a problem. The historical precedent for that, the best one is Weimar Republic, 1922. But the same problem, of course, with Zimbabwe several times in the last few decades. The first hyperinflation in Zimbabwe in the 80s or 90s, I had a good friend who was working at a brokerage on the stock exchange, and they had to stop printing client reports in portrait. They had to start printing them in landscape because the balances were so big, there wasn't enough space for all the zeros on the page. So you became a quadrillionaire googly what in the space of about 2 or 3 months. But convert back to USDs, you could still basically buy, a carton of milk. So if, that's the problem you face. Now that was against the dollar. So to answer the question, do I see many currencies going off against the dollar? I think maybe here and there. I think the South African rand has probably had its day. I don't see it being potentially that catastrophically bad relative to anything else in emerging markets. There's definitely a few that I have to cover that are way worse off in terms of debt and in terms of the lack of ability to refinance that debt and grow the economies. A more interesting thing, though, is as a firm, we are investing in gold and we're advising clients to invest in gold, not because we think there's necessarily some sort of a crisis coming up, but it goes along the thesis of certainly not, it's not a thriver, but it's tough to make up a case why gold will not be a survivor. It's a very, very resilient asset. And it certainly is something that we're advising clients to get quite involved in for the simple reason that, if it is true that there's too much currency being printed, then gold would be a good store of value. But we wouldn't go and say, I've seen people calling for many multiple thousands worth on the price because all currencies are going to collapse. I think that's a bit extreme. But you never know. I think if we have to go through a scenario where we have to print even more and more money, maybe. But as it stands, that sounds a little bit alarmist to me, but I'm still not taking too many chances on it.
Yeah. All right. Well, thanks a lot, Johan. I think we are there's just a few more questions, but I'll try to put them all together here and there, but we have got time limitations, as it were. I know that where you are, it's already very, very late. I've got a number of questions, but we will also try to post further questions on social media to deal with the questions that are being raised by people. There's some questions in the Q&A that I just want to quickly put to you. There was a question, do you think that COVID-19 will contribute to greater African innovation?
Sorry, contribute greater to African?
Question because there's two. Yeah, will COVID-19 contribute to greater African innovation? And will there be international investment appetite in Africa? Just a quick one on those two questions. Thank you.
Yes and yes. I think that innovation will be enforced because if you don't, you're going to be a sinker. Nobody wants to be a sinker, so you basically adapt or die. And I think Africa has got the ability to do that. And I'm already seeing, the research we're doing is suggestive of the fact that there's enough people on the continent that completely understand the points I've been making. Will there be greater investment appetite? Again, from first-hand experience, I can tell you that we're having those discussions. People asking us to do research for them on precisely what's available. So I'll keep that. That's not a sales pitch. That's just a point of fact. In fact, as a firm, we'll be involved in helping people set up frontier investment platforms. So what that means is there's capital available. They're interested in the opportunities. Africa is part of frontier markets, and they're going to be looking. And the good news is these are from a variety of countries. It's not just from China, where it's like a debt-driven type of approach. These will be equity investors, and they will be looking across the industries that I've mentioned. This is a slow drip, but it's certainly going up. It's not coming down.
Thank you very much, Johan. I'm going instead of looking at all the other questions, maybe just quickly try to bring the whole webinar this afternoon, the first in our Business Rebound series, to a close, because we are limited with time. And as I've said, you are actually already quite late down there. And thank you very much to our audience and participants for their participation, and also the very insightful and provoking questions that has been asked. Beyond to particularly your presentation that has gone into this webinar, the preparation as well. I want to thank you for the insights that you've actually shared with us today. And I think I want to actually draw up a little dictionary of some of the very, very interesting terminologies that you've used here today. And I think the pan-recession or pan-session is one of them. The whole economy reminds you of donut economics. You spoke about the debt burdens. And I think the question you raised there about, when you are 80, I will still sit with your debt. So the whole story of the generational debt curse, if you want to. And then the African perspective, the whole story of sinkers and winners and thrivers. Really, really wonderful and important for you also to impress upon us and this audience the importance of education to really bring about the kind of change. And to the question that Paul Geswant raised about innovation in Africa is precisely a resilient education system that is responsive and creative and innovative, that will actually stand the test of time. And then, of course, you mentioned the whole role that blockchain can play, and of course, the whole folly of leveraging, your options of loans and incurring debt. It's the fool's paradise to think that is actually leveraging yourself in the economy. Your advice there is maneuver yourself out of debt and try to be resilient in that way. So I really think it was a wonderful, wonderful presentation that we've actually had from you today. I want to thank all of us once again, our technician, Mr. Terence Scheinberg, the team, Leanne Vasi, Paul Geswant, as well as Johan and other people that made this possible. I really want to thank you for that. Our next series will obviously continue along the lines of economic recovery, the business rebound, what we can do in Africa and in our own country, not just the big corporations, but also small business, how we can pick up ourselves out of this economic crisis and really, as Johan has said, become thrivers, become anti-fragile and become better at what we are doing, and not just be prepared to say, okay, the status quo is fine. I want to leave with a quote on 1 minute to 5. It comes from, her lady's name is Sarah Petuliania. Yeah, Petuliania. She's the head of the Overseas Development Institute. And she said the following: we won't get back to normal because normal was the problem. Because everybody talks about the new normal, and looking at the socioeconomic deficit we had in our country and in the world, the new normal cannot take us back to the old one. And of course, that was the problem. And it sort of resonates with Einstein that says that you can't use the same mindset that created the problems we are living with today in the world. Ladies and gentlemen, thank you very much for a wonderful, wonderful afternoon with Mr. Johan Worster, alumnus and advisory board member of the Nelson Mandela University and Business School. Thank you very much for your time, Johan, and our wonderful and warm greetings to you in Singapore. All the best.
Thank you very much. Thank you for having me.
Thank you. Thank you to the audience. Goodbye.
Bye. All done?
Yep.